Hi everyone, welcome to Breakout Wednesday. It is Wednesday the 4th of September 2019. The markets over the last week have been choppy. The Nasdaq broke out of this tightening range and then has fallen back in it. The Aussie market broke out of a very similar little tightening range quite explosively, and it's just retracing. It hasn't fallen back into that range yet, it's just retracing back to test it. Now, it's been a really good week for traders, for people who are just concentrating on actually trading individual stocks and not staring at the headlines and stressing too much about what's happening in China or in Hong Kong or in America or whatever. And so I'm going to go through, first of all, some setups, secondly some setups, but first of all I'm just going to go through a few stocks that I've been chatting about the last 1 to 2 to 3 weeks, watching setup, and a lot of these stocks have just been showing relative strength and then breaking out. And so I'm just going to run through a few. First of all, MCR, I've talked about the last 2 weeks, just setting up here it came up in a Davis box scan, just setting up here as the markets were being quite volatile and having some down days. Mincor was just cruising sideways. We had a violent breakout and a really, really nice run up. Okay, so it's why during downtimes in the market, as I've said, a bunch of times last few weeks, just, I work a lot harder than during really good times, because I'm trying to find relative strength stocks that are unaffected by down days and that are just setting up in really nice patterns, and then I'll just literally trade them as usual, and they can be some of the best trades out there. So last week I mentioned that EOS was one of the main setups that I was watching, probably of my most serious setup lately. It broke out of this range and storming up, still got full position there, so we'll see what happens with EOS, but it's a very good start to that trade, and it's just a textbook setup that I talked about last week and probably the week before. Just setting up above all the moving averages, not caring about the down days, not caring about the negative news. It's having good days on bad news. It's exactly the sort of setups we want. Another one I've talked about a few times, GPR, huge breakout, massive run-ups, hit its profit target. I'm in and out of that thing. Textbook setup. Another one I've talked about, LRC's broken out. It hasn't stormed up like the others, but it's still in profit and is looking pretty good. Another one I talked about in terms of a gap up trade is BWX. A lot of other people have been talking about this one in terms of forming a big base, big saucer, gapped up, big volume, consolidated 3 days, went for it. Okay, so I didn't swing this, I just short-term traded it. I got out of this on this second day here, up here somewhere. So it's gone higher without me, but in and out quickly. These, the breakout trades, the breakaway gap trades that consolidate and then break up really give such high probability entries. So that was another one we discussed. And then another one we chatted about was AHG. Okay, already done a lot. I think a lot of people thought it was a bit overdone, but consolidated sideways during all the negative stuff. A lot of green candles, broke up, powerful move. So okay, so that's just they're the main setups. There hasn't been that many setups that haven't really worked in terms of over the last week. Obviously, it's been a good time to be a breakout trader, with very selective stocks. And I think most people, if we talk about the market the last week or two, they would say that it's just a sideways chop. But for traders out there that are just concentrating on the strongest stocks that are unaffected by down days, then it's been a really good week or two. Now let's just move on to some other stuff that's happening in America. The software stocks are taking a beating. So they have been the leaders of the market for a while now. Workday, which just loves to bounce off its 50-day line and 100-day line, is now below its 200-day moving average. It was below its 200-day moving average back late last year as well, and then we had massive rally. So it might just be doing the same, or this might be the start of a sector rotation away from software. I'm certainly being super careful of software at the moment, even though it's been the leader for years and years. If we look at the main software, cybersecurity ETF, Hack is just nudging below its 200-day moving average at the moment. So software's certainly just gone out of favour at the moment. The other big one in the States, Twilio, it's facing here actually just above its 200-day moving average. So I'm watching that carefully. If this breaks this support line and falls below its 200-day moving average, it's not going to be an overly good sign. And one of the other big ones in the WK in the US is just piercing its 200-day line now. So certainly not the hot thing out there is, software is certainly not the hot sector at the moment, but it's interesting to watch play out. Now, what is strong at the moment is like a weird industry, home sectors in the States. MTH is one of the main ones. This is a stock listed on the New York Stock Exchange, basing beautifully here after a massive gap up. The gap up happened due to earnings on massive volume. Now we've just been basing sideways. We had another big volume spike here on the 7th of August, just been basing. So on balance, volume super strong, sideways basis very constructive and nice. I believe it's most likely all-time highs up there. Yeah, so MTH looking great, and so the home builders group in the US is looking super strong. The other sector that just seems to be trending up and it could be the start of a massive mega trend is the kind of hospital equipment industry. So I'm just going to run through a few. I've talked about this stock a bunch. ResMed, RMD. It's obviously it's dual listed on the Aussie and I think the New York, the NYSE. And so this thing's been in a major uptrend for a long time. It's had a few small pullbacks, but it's sitting at all-time highs, and it's just this is just such a strong uptrend. I'm not who knows how high that's going to go, but I'm long that, as I've mentioned, and I'm going to stay long that. MDT is another big one in the States, which is in a massive gap up on good earnings, and it's in a strong uptrend. So that's the industry that's doing super well. That and home builders. Okay, now I'm going to run through the other. The other industry that's not doing too bad sector is social media. So I'm just going to quickly look at Twitter now. Twitter's been basing here. Actually wicked above this base last night, and closed back in it. But it's still, this stock's showing a lot of relative strength, and I'm watching the social media companies carefully. Snapchat's also been showing quite a lot of relative strength. So anyway, it'll be interesting to see what happens with the social media companies, but they're certainly a lot stronger than the software and a lot stronger than a lot of the other sectors out there. So if the market turns, I'd say that my bet is that those stocks with the hospital equipment stocks are going to be the leaders, and they're the ones that I'm going to concentrate in. So I've got a list of just a few other setups here which I am stalking. Okay, so obviously BAP, ASX stock. We had a massive gap up here on earnings, and now we're flagging, and so this is a nice tight little flag. I'm just waiting for this to break up, and then I'm just going to join that uptrend. We're having a down day in the market today. It's currently like 1 p.m. Sydney time, and let's just have a little look. Yeah, so we're having a pretty decent down day today, and BAP's holding strong. So BAP's flagging there on low volume after a massive gap up. It's a decent setup for me in BAP. Coca-Cola. We had this gap up. It wasn't on huge volume, but we had massive volume back here, and then it's just holding that gap up. So watching Coca-Cola for a swing high. ECX, this thing, it's if you study the 200-day moving averages a lot, it's just amazing how often these bases that are below their 200s fail. This thing's come up and it's hit this 200-day nearly, and it's just moving down. So if this can just base tiny bit longer and break up, it could coincide with breaking above that 200-day moving average line, and it's certainly a very nice base. If you take all the moving averages off there, the base looks kind of perfect. Massive volume back here at the start, a little bit of volume here, at the start of the actual this pattern we're talking about, but a lot more desperate volume, buying volume back here in June, and then some decent volume back here in July, and then we're consolidating it sideways. Balanced volume's reasonable, but the volume during the pattern's pretty small. On a weekly chart, looks really nice as well. We have 1, 2, 3, 4, 5, 6, 7, 8, 9 tight weeks there. These are all inside bars. If we draw, this is about a bit more than halfway down this formation candle, and it's all inside that. So it's a nice base. It's a very high probability setup, this base. For me, I'd love that 200-day moving average to just be sloping up or sideways, but it's getting there, and and that's certainly could be a good move on ECX. All right, now quickly moving on. Flight Centre I talked about last week. Huge base, bottoming base here. Now we're forming this type pattern. It's a down day in the market today, as I said before, and it looks like Flight Centre is unaffected by that. So I'm liking the look of Flight Centre. IPH I'm watching because we had this massive gap up, not massive, but a really nice, strong bar here on big volume, all inside bars, and we're forming, this type pattern here. Okay, so IPH is, it's a good setup for short to medium term move. It's not really a long enough pattern to. It's strong uptrend the stock's in, but it's not a long enough pattern to have a bet about where it'll be in the years from now. But if that breaks up, then I'll take a bet that'll be higher in a few days, few weeks time, and it's a good setup for me now. RZI, it's done a lot and it's formed this pretty, toppy looking double top pattern here, but double tops sometimes, form into ascending triangles, and we need to, I want to watch this base and tighten on low volume and then break up above these highs here, and it could be a pretty sweet move. If we look at that on a 5-year chart, I mean, it's, this thing can move, this stock can really move, and this is a nice base. So I just wanted to base for another few days there on low volume, and then we can have a nice breakout, hopefully. Twitter, I already talked about. Twitter is hopefully going to go back up, but anyway, nice setup. I'm watching Woodside. Just we had a bit of oil strength last week in Beach, and a little bit of strength in Santos. I'm just looking at Woodside. It's returned into this, massive support areas, massive support down here at 28, massive support down here at 29, and we have this, fall in support, support line here. And so if we can get down to a confluence area around this support and also break in this resistance line, it just could be a really, it's not really the sort of trading I do a lot of, but it could be a super low risk entry if we can pick this thing up. Not now, but in the not too distant future for around $30 and a half or something, and have a stop loss down at 28.40. It's a low risk entry, in a massive stock. Talking about just the areas of confluence, a few weeks ago I talked about CBA and how I liked this rising support line and the 200-day moving average, and I drew this little box of support here, and I said if we can just fall down and jump into that box, it's a great place to pick CBA up. So it fell down, I grabbed a few more of them, and this may come down and take out this low and form a new low here, but I like holding some banks for the really long term. I'm talking until I'm no longer, until I pass away and all that stuff. So I view that's a great time for me. This is a good time to pick it up, and I just sit back with the banks and collect dividends and pick them up when I think they're cheap, and really just forget about it. So that is that. Now there are a few others here. Zero base in here. Now it's going to be just super interesting to see. This is obviously a leading stock on the Aussie market. Is this going to roll over and break this up, rise in support line and go test its 200-day, or is it going to base here and then break out of this ascending triangle? If it can do the latter and break out and go higher, it's going to be a really good sign for the market. And this is so I'm watching Zero. And another similar one, Zip. So obviously Zip's one of these payment companies. Most people know about it. It hasn't done as much as Afterpay's done. Okay, let's just flick to Afterpay. Afterpay's obviously had a massive run and had really good earnings the other day and went up even more. So I'm watching Zip. It's a few. It's once you start looking at Zip, when you walk into retail stores and shops, you start seeing their little signs everywhere. And it's so it's a good setup. I've got some of them today, so we haven't obviously closed yet. So 3 hours till close, so we'll see what the volume does by close. But Zip is looking decent. Now that was it in the US market. This really, I'm trying to just play it easy because I still have open positions in a bunch of restaurant stocks. The stocks I like long term in America that I have positions on are Nike. I just love the company, and it's been in a strong uptrend. I'm trying to I try and buy the dips in Nike. McDonald's I've talked about a hell of a lot. ResMed I've talked about a hell of a lot, so I won't go over those. Lulu, I watch super carefully. I mean, with all the trade talks that's been happening, and Lulu just seems so unaffected by the whole thing. It's sitting at all-time highs still, and I think they've got awesome products and awesome earnings and all that sort of stuff. And so now, because I'm still long a fair bit, I'm pretty selective with what I'm looking at in order to into trade at the moment. As I already mentioned, MTH is the top of that list, and it's not the fastest moving stock in the world, but it can move pretty decently, and this is a very nice constructive base. So I have orders sitting waiting to go on MTH. Okay, that's it for this week. I'm just going to keep concentrating on individual stocks, on setups which are unaffected by down days. I think if there's one secret, the biggest secret in the market, it's look for rejoice when the market's down. When you wake up and the Dow's down 300, 500, 600, 900, whatever, don't get stressed by that. Just crack a smile, because these are the days that you find the strong stocks. You find the stocks that are sitting in tight patterns, not giving a hoot about the down days. They're the ones that, as soon as you get any market strength, they're going to fling higher. And so that's what I'm doing at the moment. Okay, take care. Chat next week. Bye.